going to be able to retain a lot of the details. So when you're going to a scene, like for instance, like an EMT, a person that treats people on the scene, they have to be conditioned to be calm. Otherwise, they won't perceive the symptoms of shock, other things like heart attack, stroke. So they have to be very calm. And if you treat your development as a trader or a technician or a student of the price action, you got to do the same thing, and you have to make it boring, but not to the point where you don't want to do it at all. But it has to be boring where it's not raising your your attention span to anticipate emergencies. Okay, you're not demanding the outcome be a specific thing for you. You're just simply observing, just like an EMT. When they show up, they're there. They're looking for the symptoms and what they have to treat as first responders. Well, as a student, as a first responder to you sitting down watching price action, you have to have the same indifference. You're there to do a job, observe, and then treat. Well, you're viewing these candlesticks as they form with the same MO, the same approach. You're not forcing an outcome. It's not imperative that you get everything right, but you still have to bring in the information. You have to take the information in. And if you don't give yourself the freedom and the flexibility to observe what price is doing when you don't know what you don't know yet, and that period of not knowing what exactly you should be doing, it's an uncomfortable state of existence as a trader because the natural tendency is I want to go and watch somebody else that knows what they're doing because I'm uncomfortable in my own hands doing this. So I have to go watch somebody else so that way I feel informed. And that's what you want to resist. You want to get away from that. And you want to allow yourself to be in the moment watching price action and pull details out. Do certain things tend to repeat? Do the things I talk about in price action, do they show up or manifest in price and yield themselves to you as a means of saying that did that thing that usually takes place like he says. If it doesn't, you record that and don't block it out like it didn't happen. Record it and say, okay, this is what my observation was. I expected this to happen and it didn't pan out. So that's an opportunity for you to see what you read wrong or what you omitted in your observation because you missed something. It's always error on the operator. When I do it wrong, it's me that did it wrong. It's me. I did it wrong. And that's personal responsibility. And you have to have that and you have to develop that in the beginning. And don't be afraid of it. You have to 100% own everything about what you're doing. There's no team effort here in trading. So you see how we came down? Look at the bodies here. I mentioned how once we got out of this with this candlestick's close, this became an inversion. And the bodies, they can come back down here, but they have to stay above the midpoint. You see that? See how it behaved? That in and of itself, from here to the low of that right there is a small little micro market structure trade idea that you can explore on a 15-second, 30-second chart. That right there can be a model. And you don't even need it to go to where we are expecting it to go to. That's that's the part of you bringing your own personality and the level of your understanding in play so that way you aren't forcing the best outcome just because you think it might go there and you're trying to learn how to do this and you're learning how to read the tape and be comfortable doing it and enjoying it. Don't feel like you have to create these Olympic level feats of outcome where it works perfectly in your favor. You don't do anything wrong. None of that stuff. You want it to be fun. That's the most important thing. You want it to be fun, but not a sugar rush where you're constantly like hopped up on goofballs. You just want to relax, enjoy it. It was profitable for you to observe price action, even if it doesn't do what you wanted to do. And it's fun. It's many times I attribute to like a form of meditation. If you just allow all your problems to leave you for a little while and just pour your focus into these candlesticks, you know what you can't do? You can't stress about your bills not being paid. You can't stress about all the problems in your relationship. You can't stress about the job that you hate Because if all your attention's right here, you can't be.
Quando i mercati sembrano caotici, non dovresti investire alla cieca. Scopri come gli investitori esperti della community Toro trasformano le notizie in decisioni di investimento informate. Trasforma l'incertezza globale in esplorazione finanziaria con la saggezza della community. Questo è il potere.
So you're doing two things. You're building your experience by reading price action, and that in itself is going to be a huge advantage over folks that don't want to do these types of things. They want to get in here and push buttons and make money. And the statistics prove that they lose money doing those types of things. So, as an educator, as a teacher, I try to cultivate that in your mind as a developing student so that way you're not fixated on trying to chase money. You're trying to chase excellence. Excellence and execution, baby. That's what we're trying to do. And in the beginning, you won't have that. But you're going to do things and practice things to get to that degree. And it's going to come on the right time. It will not be late, but it won't come as soon as you want it to. And you have to subscribe to that's how it's going to be, and you can't speed it up. So that's submission to time, and that's not weakness. That's maturity. That's you managing yourself in an environment that you have no control of the outcome. And that's what trading is. You don't know what the outcome of that trade is going to be, whether you're doing it with a paper trade, demo account, funded account, evaluation, real account money, live button. You can't control the outcome. The only thing you can control is how you're going to engage it, how much you're going to risk, how long you're going to stay in the trade, what you're aiming for. How often are you going to take another setup after that? It's just the way it is. That you are the only thing that you can control, and you learn how to operate in indifference in that environment by tape reading, where you condition yourself, where you're looking at certain things happen, and you're not needing it to be perfect. And you're identifying it didn't do exactly like I wanted it to, but it still did it because I waited for it to happen. And I'm taking in new information, I'm taking in new experience. That new experience needs to be logged in your journal. And you got to be honest with yourself, but not critical, where you hurt your feelings by saying, I did this wrong. This stuff's probably never going to work in my own hands. If you do those types of things, the only thing you're doing is anchoring toxicity to the progress. And you cannot enjoy that. No one can. It's impossible to enjoy that. So if you're not going to enjoy it, if you're not going to be relaxed, because that's what you're doing, you're teaching yourself how to be relaxed in a state of indifference so that way the outcome, it doesn't have to win for you. It doesn't have to, because over time you'll see that the things that you're exploring in price action, they're going to yield more often than they'll fail. But you're comfortable accepting the times when you do it wrong and it fails. And it's a hard lesson to teach. It's very difficult to teach that. But it's a lesson that everybody has to learn, or you will not be successful.
I know
All
because
right, so far we got
sometimes
the bodies that came down here. They didn't touch the consequent encroachment of the inversion fair value gap. We had a nice little push above. Let's look at that short-term high here and trade up into this area here. The bodies have not touched up there, so that's a point of concern at the moment. But we're inside of the order block that's here. Why is it the open of that? Because this candlestick's larger and more protracted than this one. Okay. Overall, this is all one portion of an order block, but that right there, that price, that's the change in the state of delivery. And we're returning back into the inversion fair value gap and this big down close candle also. So there's several things in here. This is the type of price action you would expect on a morning ahead of FOMC. So you want to observe all these types of things. There's a whole lot of skittishness. It's like a reluctance to do something. It'll do things that are unexpected. You may think that it should perform a certain way, but then it doesn't. Or you expect it to run and it doesn't, just stay stagnant. That's the characteristic of this morning every single time FOMC happens. So what it'll communicate to you is when you don't risk real money and If you observe price action and it doesn't yield to you as you would expect, that's a reward. That's a reward for you saying, I'm not going to participate in something when I know the probabilities are so against me. But for the sake of experience and experience only, I'll engage price, I'll watch it and see what it does. And when it does, say it pans out like you want it to, you don't get so sugar rushed and think that you're smarter than everybody else, and that means next time you see FOMC, you're going to trade with real money. That's not what we're trying to encourage here. So from here to there, as I was talking about, that could be your model. By itself, that little price run, some of you might think that that's not enough for me. Well, if you're brand new and you can find these types of price runs like that, and that's all you can do, you're outperforming everybody else, because 90% of people that trade don't make money in retail. Now, think about what I just said. 90% of retail traders lose money. But because it's a net sum zero game, for every winner, there's a loser. So the retail traders that lose are doing something that the other person on the other side of the trade didn't do. And that's what I'm trying to teach. I'm trying to teach that type of that paradigm. So see, right now we have 930's candle, pretty much just hemming and hauling back and forth in here. They have left the buy side here. They went up into this inefficiency, wonderful. The bodies couldn't even get to consequent encroachment. So it would need to really have a strong showing out of the upper half of this to make a run above here. If it can do it, I would be interested in seeing how much of an interest does it have to get above there. Where it is right now, it becomes less likely if we take out that low on a closing basis. So if this candlestick goes down, or anyone after that without taking these highs out, that low becomes more likely to be swept. And I can see already there's people out there thinking, look at this guy, he's calling both sides of the marketplace. I told you I don't have a bias. The only thing I would be interested in is seeing it run where it's smooth. I would not be interested in being short. Let's put it that way. And it can drop, and it would be nothing to me. I wouldn't care. But what I'm looking for is something to justify a run up into these levels, as I've indicated. One of the most difficult things as an educator is encountering people that believe they know how they should be taught when they have zero understanding about the subject matter they're engaging in or delving into. It's somebody that's not teachable. When I was doing paid mentorship, I had a lot of those types of people come through, and it was so draining. You couldn't pay me enough. Like, literally, you couldn't pay me enough money to ever do a paid mentorship again. It just would never happen, ever. All right, so we're inside that 50-50 margin where it's going to have to go right now, or it's not going to go, meaning that we're in the upper half of that SIBI here. So it would need to start accelerating and take out that high and get to that buy side. And it would really need to do it quickly, because anyone that has their stops up here, if, say, for instance, like I was Phil, okay, say I was doing Phil's job today, I would ram this son of a bitch right on up there violently and give them no opportunity to pull their orders. I'm hoping when we get to about mid-May that price action gets a lot more looser, and we start seeing things real clean, nice price runs, high, moving higher and lower. Man, that's going to be a welcome change. And the reason why I say mid-May is because Powell. We get to see him, I think, for the last time today, and then we'll deal with one of the good old boys. I'm very interested to see how the markets are booking price after May. So we have a sell side imbalance, buy side inefficiency here. We trade up into that, and we're getting real heavy here. So watching the bodies, and then that level right here. Being real reluctant. And when you see market environments like this, and you've already counseled yourself, say, "Look, I'm not going to participate," or you give yourself the freedom to just engage price action, and whatever the outcome is, you remind yourself that I would not be taking a trade in this environment. I wouldn't be taking any trades. So whatever the outcome is you're indifferent to it. But when you see price actions just lethargically just meandering around doing nothing of real importance, it's very comforting knowing that you would not have been caught off by anything that the price has done so far. And that's also something that you're recording every time you tape read. You're going to gain confidence, not overconfidence, not arrogance or egotism. It is a great deal of work to overcome initial fear of getting in because you're afraid that you don't know everything, and everything is never known by anyone. So while this is smooth up here and an obvious level where it could be rated, this premium array has held things at bay, and we have bodies now below the consequent encouragement of this SIBI. So barring some sharp rejection of this, that sell side becomes the minor sell side. And as long as we stay in the lower half here and no bodies in the upper half, that becomes a point of focus.
Equities open deceived me today. We had a very nice drop on S&P 500 and the Nasdaq, created SMT divergence here with the Dow Jones. We had the previous daily high left untaken on the S&P 500, leaving relative equal highs, which is what I thought
US 100
higher to then break that S&P at the highs.
figures looking at that, that looks like
The
strong
next 15
resistance
minute
there
candle
too.
on the S&P 500 displaced higher as well. And the 5 minute chart was also looking like this. We had a clean V-shaped recovery.
I'm looking at the wick here. on US 100. So the chart on the right hand side. I'm looking at that midpoint right there, and I'm watching how the bodies are forming in the current candlesticks, and they're not touching that yet. So that might be a little bit of Phil Billy hinting. We'll see. That's how So if it can run from there and get above that 85 level here, it should be quick and sudden for him to get to that buy side there. Some aspect here, we can get it in the upper half of this
How do you
SIBI.
know the bonds are worthless? Aren't they filled with
Can bring
fucking thousands of pages?
conversion
I read them.
by not
Read
letting
them?
any bodies
They're
be laid down
no
here.
one
Once we get
reads
out
them.
of it
Only
here,
the lawyers
if
who
we
put
go
them
up in
together
here
read them.
and book
I don't
outside
think
of it,
they even know what they've
we would want to
made.
see it stay out of the lower half.
The housing market is propped up on these bad loans. It's a time loan, not a short.
We're about
Through
speed
what
now, okay?
instrument, Michael? There are no insurance
If you had
contracts or
the chance
options
to
for
snatch
mortgage
people
bonds. The bonds are
and pull their soul out of
This
their
is what
body
I'm gonna do. I
by
am
being
gonna
short and
get
having their
a
stop
bank
loss right here,
to make me one.
would you give them
Then
mercy, or would you
I'm gonna buy
run it real
You
aggressively
want to bet
after they
against
take
the
it?
housing market.
And it's
Why?
kind of like the internal dialogue.
Those bonds
It's
would
not
fail
always
with
so
millions of Americans
jarring
located in
or
mortgages.
horrific,
That's never happened in
but
history.
you know,
Excuse me,
you
Dr.
might
Berry,
look
it
at it
seems like
from
a foolish
sporting
investment.
event
Everyone's wrong.
perspective. You know, however, whatever analogies you want
This
to
is
build
Wall
while
Street,
you're watching
Dr. Berry.
price
If you
action,
offer us free money, we are
that's your
going
own
to take
personality.
it.
That's what you
I
bring
have
to
to
it.
respect decision on six
So
mortgage-backed
the ladies
securities.
in the community may look
Dr.
at
Berry,
that
these
as,
should be
well, if
fun.
it trades
Yeah,
up there,
good
it's like
enough.
letting doves out of a box and doing gender reveals, something to that effect. I don't know, but whatever it is, it's going to cause you to watch it and observe the outcome and have some measure of expectation. Should it get there? Small little gap here on MNQ. We have the volume imbalance there, but I'd like to see that stay open right there and then accelerate to the upside and get into this area here. Real slow morning. Real slow. Okay. Now see how we went back in the upper half of this one? We want to see it try to make an attempt to get out of that by any means, really. It could be a wick now. It doesn't necessarily have to be a body. But once it does that, then discount sensitivity. When the markets get a little bit more loose and they start being permitted to trade a whole lot larger range and leave inefficiency behind. When we're doing live streams like this and I'm calling candlesticks and price out, it'll be a whole lot more fun. In fact, it's going to be something like you're going to have to try to keep yourself calm down because it'll feel like a sugar rush. But this is the best way of learning right now when the markets are doing these types of things because you're going to get days like this even when the markets are not dealing with all the geopolitical stuff that we have right now. It'll be a day where you expected something to be nice and easy, but it doesn't. And if you have never encountered these slower market conditions, it can cause you to act a certain way, maybe be vindictive, take everything personal, feel the pressure of it not doing what you wanted to do in the time frame you wanted to do it. It's just a whole lot more of a discomfort versus being here, learning from it, and realizing that it's not the end of the world. Like it's just one day that you're encapsulating your focus with the express purposes of gaining greater understanding over yourself, what makes you tick, what causes you to feel anxious, what makes you feel excited about something panning out. Do you feel like you want to abandon the ideas that you're trying to implement by reading price action, or do you feel drawn to pursue more of it? Are you encouraged? Are you discouraged? And you're learning a whole lot about yourself. And trading is like it's the cruelest mirror you're ever going to encounter. It's going to tell you everything that you do wrong, and you can't hide it. You can hide it on social media and amongst your friends and family, but you can't hide it from you. And that's the thing that makes it tough. So you have to warm up the idea in the beginning that this is going to be hard. It's difficult. But if you remind yourself that if you over time learn how to do this well, and well is not blowing up, but getting once in a while transaction, that leaves you net positive for a month. If that's your goal, then you had the right mindset and you can grow from that. But if you demand every outcome every day that yields, profitability to you, you're going to struggle because in the beginning you don't have that skill set. As much as you might want it, you're not going to get it fast. And the faster you want it, the farther along it's going to take you to get to it.
I wanna move the stock to break even, but I need the price to
See how we
reach
came
this
down here?
point to move the spot
We left that
to
little
break
portion
even.
open. So it needs to not be doing all these little wicks like this. It needs to accelerate, get up into this area here, and put a body up on this line or above it.
See, I don't like this. I wanna see price go and close above this
I just
consequent
realized I sat
conflict
here and talked myself
of
late.
this.
Oh, shit. Hold on one second. Well, that cost me 3 weeks. I think I'll be able to get in until 3 weeks from now. So this cost me a little bit. So I hope you appreciate this. Anyway, so as I was saying, you see how we came up here. We had a body placed above the midpoint of this consequent encroachment of this SIBI, which should perform as a inversion. And then they whipped down into the high of this SIBI, which acted as inversion. The bodies need to stay out of the lower half here, and it needs to accelerate and put a body up on this line here or above it. So while this is still pertinent, it could be used as a means of like defending.
This is trash price action.
Hang on 1 second. Okay. The levels of like the high of that SIBI here, that little gap right there, and the rejection block there, that would be like the 3 PD arrays that would support this entire price run up here, aiming for that level where the relative equal highs are. That would be where I would have the 3 PD arrays, and the stop loss would have to be below that rejection block for that purpose. So when we're watching price action or mounting a run up this sheer rock surface, and you're performing as a rock climber with price action, reading it Where should it be a foothold? Where's the next hand point where you can pull yourself up? That's this one here. Okay, so it needs to get a body up there to grab that.
I'm coming.
Order filled.
And then it can anchor point of the climb. And that's all price action is for me when I'm watching it. Like I'm looking for areas where there should be a means of support for further prices going higher, right at a very specific price point that is not support and resistance theory by
Moving price to
textbooks.
break even.
It's looking at inefficiencies, gaps, wicks. I did not look at this high here, okay, and say, look at the high of that. And if price comes down to that, because you can see it's not doing that at all here, but it's using the logic of me mapping out this. See if we can get that run up in here to that other buy side. Right there. Okay. So just be mindful. This is the other target I said I'd like to see, and if they can get real animated to take that. And it still wouldn't displace or disrupt anything that they have planned for the afternoon. If you were with me today live, you've watched this live, or if you watch this later on when the time permits you to be able to do so, and you found what I went through today and outlined, if it was helpful to you, if it made sense to you, if you learned something today, if it encouraged you, let me know in the comment section and give it a little thumbs up. It'll let me know that my time's being appreciated because I don't have to do this, folks. And if I get bored, I'll probably do less of it. And the way you keep me engaged is tell me what you're experiencing when you watch it. Okay, if it doesn't work, if I'm calling both sides of the marketplace and it's never working out and nothing ever seems to be doing what I said it should do, say so in the comment section and be prepared to have everybody correct you if that's what you're going to say, because none of that's actually happened, is it? So now, when you look at things like this, the natural assumption is, okay, let's assume for a moment
Giallo, ma che fai? Perché non stai al lavoro sui mercati finanziari?
Perché mia moglie ha detto che non sono in grado di fare trading e mi ha messo a fare lavori domestici.
of a new student or someone that wants to use me as an oracle for taking trades, the natural tendency is, okay, now what's next? And you're skipping over one of the greatest potentials for you to develop greater understanding about yourself, mastering yourself as the person that's behind the trader. This mechanism that we have to stave off, which is, all right, now what's the next thing? Now what's the next thing? You're not doing drills. Drills, you do that when you're doing drills, where you're desensitizing yourself to entering and taking participation in the market. That's not what this is. This is tape reading, where you're getting a feel for what price is likely to do, why it should behave a certain way, and you're training yourself to be indifferent to the outcome. You don't need everything to be perfect. And you're
If
constantly giving
discussed
yourself a
disrespected,
feedback loop
with
of what is
this
price doing
also
right
I'm
now?
closing.
Is it still likely to continue doing what I think it did when I first sat down and outlined where I think it's going to draw to? Okay. And you're constantly measuring the feedback of that information, viewing each individual candlestick. And it's not complicated. If you feel that this is complicated, it's because you haven't done it enough. And that is not a derogatory expression making it sound like you're lazy. It just means you haven't spent enough time doing it. If you continuously do what I'm showing you here, you will be able to do what I'm doing. You'll be able to pick
See
one side,
price
be
reacting
comfortable with only one
exactly from
side,
this
and
from
then
the
look
lower
for the
half.
things that support moving higher
The fuck is
or
this?
lower if that's where you thought it was going to go. But the key is picking up on signatures that tell you, okay, it's behaving a little bit unruly right now. It's not doing exactly like I would like to see it do, but it hasn't really abandoned the idea yet. And that's a hard place to be as a new trader, because you probably put yourself into a trade and now you're experiencing that. And it's painful. Even if you make lots of money, it's painful, and it's like a release, not like an orgasm, but like you got out of jail and you've been doing 25 years and you just got out of jail. Now you feel like you can finally breathe. You don't want your trading like that. You want your trading to be like, well, I looked for this to happen, and bada bing, bada boom, it pans out, and it's another thing in a day in life. It's not like highlight reel, go to the social media and say, look what I did, because you can't believe what you did. That's why everybody goes to social media and posts that kind of stuff, because they can't believe they did it either. So they need somebody else to convince them and pinch them that, yeah, that was something cool. You go to your journal and you say, I executed or I tape read today, and I enjoyed it. Like, I had a lot of fun today. I had fun doing this today. It was very relaxing. I'm learning not to be fearful of what these candlesticks are going to show in price action, because the candlesticks are not going to hurt me. I'm not putting the knife or the gun in the candlestick's hands and saying, I dare you to take me out. But that's what all of you are doing when you're trying to trade before you know how to trade. You're literally giving it a weapon and you're daring it to hurt you. And then you're surprised when it happens. I mean, I did the same stuff. Trust me, I did all that same stuff as a 20-year-old. But you have to make it enjoyable. You have to make it where it's safe. It isn't going to hurt you, specifically from the emotional and psychological position first. The money is always the last thing. Okay. And if you've made it the last thing and you've done really good
We need to see
work in terms of
acceleration to
preparing
take this
yourself
buy
to be
side right
indifferent to the
now
outcome,
in this
but
30 seconds.
staying process oriented with a model, you're then in the best position to manage yourself under the context of making risk-based trades with real money. And then you'll be mature enough to accept the success without getting pompous and arrogant and,
Order filled.
becoming conceited. And then it becomes a matter of outdoing what you did the last time for public, approval. There you go. We haven't seen it quite yet on NQ yet, though. US 100's already done it. So we'll see if we want to see a continuation there.
Order
All filled.
filled.
Okay. Done for the day.
There you go.
That was
So there you go.
funny.
Screenshot that. And you can go and tell everybody that ICT doesn't know how to trade and he doesn't know what he's doing. He's called both sides of the marketplace. It never works. None of this stuff ever works. All the stuff that everybody ever. Yeah, you hate it, don't you? You came here to want to see it get wrong, and it ain't wrong again.
Hit the man,
Ain't that
guys.
strange? Ain't that strange? Here's what I did. And I'm gonna let you in on this, and I'm gonna close the stream. I got these 12 laptops, right? And I can toggle over to the screen that makes the best sense on what I said. So you don't see the transition because they're real smooth transitions. When I say something in price action and it's working in one of the screens on one of the 12 laptops, I just transition to that one. But it's so subtle you never pick up on it. That's the secret, folks. That's the secret. Hope you had fun today. Hope you learned something. I hope I encouraged you. And I'm going to escape and wish you all a very pleasant day.
Oh, this day just
if Lord allows
kills
me and it's able to be done, I'll give you a review this evening around 5 p.m. Eastern time as a live stream. Until then, wish good luck, good trading, and be safe.
That was it, guys, for today. Thank you. And we took AW today. This was the... Where the fuck it is? Show chart execution. This is where I took the buy, and this is where I sold. In this buy side liquidity. Oh no, it's not. Thank you, and have a good day.